When the market gives us an idea about where we are going, I would argue we should not neglect that. So this was back in March 13th, and now we hit that range. What next is the thought process? To understand that a little bit better, we should be looking at something like this. This is the Bitcoin dominance giving us a macro idea of where we are going. And keeping this in mind, the macro structure looks similar. But what should you be looking at on the microstructure to understand what the hell is happening here? So look at this on the time perspective and the volatility perspective. Yes, you can see trend lines as a median, which is this dotted line, the dash line, and then the dotted line actually shows you a resistance and a support. That's a trending channel. You broke that to the upside, retested, and bounced. Here we are coming back to a macro retraced, which would be on a weekly chart. What is going to happen after this? What are the odds for this? Because right now you're watching that the daily candle closed above the moving average. Last time that happened was 39 days back, and the price kept going up till that macro resistance. Do you think it's going to run higher this time? Do you think it's not that scenario? It's this, like the Feb one or like last year, September? Whichever idea you're going with, you need to look at altcoins, especially the large cap alts, and the possibilities which they are opening up. Because not all the altcoins are showing you the same structure. If you look at XRP, this is what you're watching. So how can you stand out in this crowd with respect to the fundamentals, with respect to the technicals and everything else in the market? We're going to break all of those things here so we have an advantage in the market. Welcome to the Scientific Investor family, where the normal retail guys get to learn how to become the next top 10% of this world. If you're here, smash that like button for me. We're going to break things down into an easy way so that you guys don't miss key areas of the market. I would argue this is a time where you should be looking at a lot of these other things. Remember, we showed you this platform before, highlighting the fact that it gives you an idea of which segment is attracting more capital. So when you do see that some of these platforms, which is here, the meme coin side of things, are attracting more capital. Now look at AI, big tech. Okay, it's not negative, but it's not attracting a lot of capital. It's not showing you a lot of pop. Whether you go in to the real world assets, yet the fundamental is true, everything is true, but you're not watching the amount of money going into meme coin resembling itself in other segments. This is where you need to go through different segments to see, okay, some of that money going in there, once they're taking profits, it's also going into this side. So this helps you massively, whether you are on a short-term trade, whether you are looking for a macro opportunity, everything boils down to the point, which area are you focusing in the market? Because when you are here looking through the macro understanding of the market, it gives you key idea. Are you at a support? If so, is the entire segment starting to move up? That's where you get to maximize your gains. Now, in general, yes, the market follows Bitcoin, and that kind of slows down the entire market if Bitcoin is not going up. Here, we are looking at Ether. Bitcoin is still trying to push higher, but Ether is not reflecting those gains. So in other words, Ether is still showing you one candle to the downside is now taking 3 candles to come halfway through it. But the trouble is, even at that point, it's failing to break the support, which is turning into a resistance. That's negative for Ether, which means the next level of support you should be eyeing in terms of Ether price action is close to 2700. Just below that, just above that, that zone is going to be 1. But as of now, we have something like this forming, which is positive, falling wedge. So if you do have a wick to the downside here and you get back into this pattern immediately, okay, that still serves the purpose. Now, you take the same idea into the altcoin market excluding Ether. This is where things are a little bit more interesting. This actually clearly shows you the probability of this breaking higher, trying to flirt with that level of resistance. Remember, it's not here at the support range, it's now trying to break through the resistance range. So it's a little bit different from Ether. Ether is comparatively weak than the majority assets of the altcoin market. Now we take in XRP for that matter. You do look at XRP, it's better than Ether for sure because the last 24 hours showed you some level of volatility, trying to fake things out. And it is still holding on to this level of support, which is fine, which is positive. But remember, this is a daily chart. The second you move on to a 3-day chart, you will still agree with the fact that we're still holding on to this territory as a support, which is positive. But as of now, the market putting in lower highs, that's not attractive. You're not trending higher. So you need to see the price breaking the daily moving average, the weekly moving average. So the trend is still negative. Yes, we're trying to see the possibility that the price went down, but the RSI did not. That's bullish narrative coming in. But for a confirmation, we need to see this becoming a bullish checkmate and a bounce off here. This would give us more relaxation in terms of XRP price action. Not super bullishness, it's just a little bit of relief. Now, you take the equation back into Bitcoin because that is what kind of changes the market. Whether it's going to the upside, whether it's going to the downside, you kind of get the idea here. So last time when you did go above the moving average, the price remained there for 1 day, kind of played out. It kind of faked out. A lot of people got stuck there. So right now you're still at that point where it shows, I'm above the moving average, but maybe I'm going to fake out. Maybe I'm going to play with this range. Now, if you want to follow the momentum, just put the chart into Heikin-Ashi. This way, what you're watching is the momentum and its direction, because you want to always follow that direction, at least on a daily to 3-day chart. This serves your purpose well. Now, if you are like, okay, I don't want that amount of noise, I want to go into the macro, you zoom out on a 3-day and you're not yet watching that, let me go in, right? That's not yet there. For that, either if you are a little bit high in your risk tolerance side of things, you enter here, or else you enter after the break of the moving average, which would mean you're waiting for the price to go up $2,000 to give you a confirmation that the price is going back up. Now, say you're like, no, I'm a spot rider on the weekly. You're waiting for a green weekly candle close. This is one of the most simplest thing to do if you're like, I don't have much time to analyze. I just want to buy, I just want to sell. This is all I want to do, but I still want to make profit. If that's you, go on to a weekly chart, buy when there is a green weekly candle close. So each time if you look after the corrective move, when you get this, the price move up. Yes, you do get retest. Yes, you do get some fake outs. But if you take 10 trades, you will see that 7 to 8 times you are on the winning side. And that's all you want. Now, each time, if you want to reduce that 7 to 8 times, yeah, you can try everything. But if you just stick to the one rule, which is, okay, the average drop here is 20%, and I buy when it turns to green after that average drop, your odds are not now 7, it goes up to 8, 8.5. 85% odds is super high. Think about this. Buffett is like below 60. Like there's a lot of legendary investors 50 to 60. So if you can reach 70 to 80, that's astronomical in terms of accuracy. Now, if you're a price structure guy who is trying to look through a lot of different ideas to learn from and to execute those in different assets. See, whether you like a small cap coin or you like a large cap coin, it doesn't matter. You are looking at the price structure basically. So if you want to use Heikinashi, that's actually okay. You can follow that. It's cool. It gives you a little bit more advantage in terms of reducing the noise in the market. But if you're more into the trend, the price action kind of things, look for a breakout which comes in. If you have a trend line, the break of that particular trend line would signal the market is continuing the direction which it was going on. So the macro trend kind of follows. Here, such a breakout would give you the next direction. This is where you try to use and understand which direction the money is moving. Especially when you see money is moving into different segments, look at that. Do you have assets in your portfolio which belongs to that particular segment of the market? If not, now you have some trouble to sort out. Because the market, the crypto market, it's a huge market. Think about this. You kind of have close to 70,000 crypto assets. That's a lot, including the stable coins. But that's too much to go through, to search through and all. So skip all of the hassle and just look through assets which are performing against Bitcoin. Not on the shorter horizon, but at least on a 3-day. At least, no, 3-day chart, meaning you're looking for last quarter. 1-day chart, you're looking for last 30 days kind of trend. So here you come back and you're putting this structure and you want to see which of these assets are trending higher against Bitcoin. Those would be something you would like to look at. Now, say you're an altcoin fan, you don't care about Bitcoin. If that's you, put that against Ether and use it. It kind of gives you a little bit more advantage if that's who you are. But I would argue against Bitcoin works fine in this market. You kind of get an idea of which of these currencies is still going up and it already dropped 30-40% where you can use them. Now, if you want further help on that, you can be in the SI family with 1,000 plus members are readily taking each and every post like this, and they understand, they are well educated in the market, because not a lot of people were giving you the idea that it's going to come back down to 56,000 when it was at $73,000. Now that's like $20,000 drop in Bitcoin when the price is going up nuts. Yes, when I post this at that time, it would feel like this guy's an idiot. Only after 2 months, you'll understand, okay, that was really a possibility which the market showed you. Because the momentum on the price and the RSI didn't match, the price action started showing weakness. Remember, I was highlighting with multiple posts. Yeah, there was like a 3-day, there was like a daily, following it up for the SI family. So the 1,000 plus members are having that advantage clearly. They understand the market. They don't make mistakes like the majority. If the majority do 10 trades and lose 10 or 9, here you have a huge advantage because the information based on which you make the decision. I believe that's the critical point in the market. So guys, if you received value here in the Scientific Investor family, smash that like button. And if you want to join the family, use the link in the description in the YouTube or on the bio from Twitter. I'll meet you guys on the next video. Bye for now.